Hello, today is the 19th of October 2011, and it is Wednesday. Welcome to the midweek report on the silver log analysis. We'll start within the 6 hour chart. This is really a bunch of nonsense, to say the least. The chart's been majorly going sideways ever since it had its short-term capitulation, and the nonsense within this price action is the price action within itself. We have a virtual casino game that determines the price of a universal commodity, in that of silver. If you were delivering doors or siding, or if you were selling barbecues, or it doesn't matter what it is that you're doing, and then your boss tells you that the price is determined by the roulette wheel at the Bellagio casino. If the roulette wheel has more of the higher numbers, we have to increase the prices. But if we get hit with the lower numbers and those zero and double zeros, the prices have to come down. You would be confused, like, this doesn't make any sense at all. And then your boss says, when has the world ever made sense before? So it's good to know that if you're looking to think sane in an insane world, you might get confused a little bit. As far as the technical analysis is concerned, this Fibonacci level, which represents this high and this low, has was originally a level of resistance. This level has been support for quite some time, and again, it's in a nonsense range more than anything. Now, as far as another Fibonacci level, this level from here to here is important. But where would be the next important Fibonacci level to calculate? And the answer is this low and which high? This one in here. So let's now calculate this Fibonacci level. Within this Fibonacci level, we have one level at the mark of 30.5, which I've noted before to be a pretty big level, and around 28 and 3/5 or 28 and 3/4 in that area ballpark. Okay, so the first level on Fibonacci in here was immediately used as a level where it traded above and below. After it broke down, it came right down to the next Fibonacci level and briefly broke above, and since then it has held this support. However, the Fibonacci high line of $33.49 fiat cents, although the dollars are more fiat than the cents are, but all fiat nonetheless, we have still yet to have gotten above that significant high. So like I say, it's showing a lot of nonsense on the short-term chart. On the daily chart, we have the Fibonacci levels from the highs of $44.22 and the lows of $26.10. The significant Fibonacci levels are that of 31.92, which pretty much is where we are right now, as well as that of 36.15. We are also in within this little band area. We have been for the last couple of weeks now. This band has now started to flatten out and go sideways. These upper and lower bands are starting to move in together. Keyword is starting. They still got a ways to go, where it's showing a lot of indecision. And when these bands a lot of times close in together, that can mean the start of the next great move. And well, where is this next great move going to be located towards? Because this could very easily be that significant resistance point. And when you start to see any momentum being lost, especially a break below the significant 30.5 level, then we would have test. Obviously, there'd be a few levels around the 28.5 to 29 mark, but then back down to its previous low of 26. If we burst towards the upside, and I think that's what would happen, is a fairly quick burst where you'd have a decent sized candle or two that would take us to this upper part of about 36 and 15 cents. I know a lot of people seem to talk about the deflationary scare before the currency happens to go, and if that's the case, then that is going to be the way that it goes. And that's what happens when you have a stable currency within an unstable currency. As silver being that of stable, after all, it does not contain a half-life within the periodic table. something of which, well, the currency isn't even on the periodic table, which means it's not universal. Although silver happens to be that of universal, which is why I consider it a safe investment. Currencies, treasuries, I have no idea why people are even considering them for the long-term future. Okay, now I want to go over one of the images I put up last week on the screen and really promote my Derek's Diary channel one more time again, as I have been getting very little views on these videos, and it continued again in week 6, despite the fact of having another 4-win and 1-loss record, upping the record to 27-10. This weekend, the play of the year will be on the channel. Okay, that commercial is over. Now back to the silver analysis. We're now in the weekly chart, and the Fibonacci within this segment in here has the lows of 1465, which were located in February of 2010, and the highs of 4981 located at the end of April of this year. The exponential 38.2% retracement is at 3121, which is a monstrous level given the Fibonacci upside at 3142, pretty much at the same mark, showing the importance that this significant level has right now. So within this mark, it's consolidated there for what has now been 5 candles, really. And when you look at this just on a blind level, it could literally go either direction, because it's already shown on price action that the area of 3121 is significant. That's all we need to know as of right now. We already realize that we're in an insane price movement. And if you're in it for the long haul, then what price are you looking to sell this at? Myself, I'm looking to sell this at div 0, meaning I'm going to be wanting to see this priced in something else, not fiat dollars, because I mean, we're just better off pricing this in the 10-day-old eggs, or pricing this in dirt, pricing this in something completely meaningless, which is what currency ultimately is. One of the good ones is that of the gold to silver ratio, but throwing that aside, if your goal and protection is to get out of fiat currency, these are some wonderful, magnificently low prices. If we do end up testing this lower band in here, all I'm going to say for those looking to buy is good luck. I hope you can succeed within your endeavors, and hopefully you don't pay too much over spot, although I think you will. And if you decide to sell at that point, then all I have to do is shake my head. And for those people playing in the paper market, again, I have to shake my head, because in reality, the paper market is nothing more than a game. The game is predicting things, predicting if a chart is going to go higher or lower, and then acting on upon it. If you go long here and sell here, then that's a successful play. If you short here and cover here, again, that's a successful play. But what's the difference, theoretically, about playing the paper game on any type of stock code, or play the paper game on any football, baseball, or basketball game? You're either going to be able to win or you're not. It's a casino-style game that really does nothing effective towards society. Thank you for tuning in, and have yourself a great day.